Hey there, traders. This is Sam for another daily recap. Today is March 20, 2025. So let's get right into it. The spiders had a pretty good rally in the morning. They opened right above where the high of the zone was. I removed the zone, which you remember was 563.65. That was the high of the zone. They opened right kind of below in the middle of that, and they took off. Had a nice run in the morning. Kind of messed up one of our trades. We'll talk about that shortly. And then came back down, kind of closed in the middle of this. So pretty much, I wouldn't call it sideways, but they didn't really get anywhere. They didn't establish any nice closes above any of these highs. So it is what it is. Not sure what they're doing, but they're above the zone. They closed the day 565.49. I might as well go ahead and put the zone back on so you can see where price is in relation to it. And so they're trying to get above it. I removed the zone from the board this morning because really the levels themselves, the extremes of the zone, really weren't good areas to trade. There was a level below the top, kind of in the middle. It's actually where they spiked right after they opened. We'll look at that in a minute. It would have been an awesome trade if it didn't happen within that 15-minute window, but more on that later. I just want to point out where they closed today. And really, it's the same story in a sense that if the bulls can just really get above this zone, they could go higher, but they've got a lot to fight through at this point. And that's what they're doing. They're hitting overhead resistance as they're trying to climb higher. And since tomorrow is the end of the week, it's Friday, we're going to see where the week closes and maybe make some longer-term assumptions then. But at this point, this is where the spiders are, and it's neither bullish nor bearish. This morning, a little before the opening bell, these were the levels sent out and the game plan. And you can read through this if you want, pretty much just stating that I really didn't have a good feeling one way or the other. I just had some ideas of what might happen. I wouldn't say the market acted abnormal. It's just that they did not respect one of the levels. Kind of got the day off to a poor start. So two levels were hit. The first one down here, I'm going to remove the vertical line marking the end of yesterday. Would have been a great trade, as I said. They opened right above this 562.82 and took off, but I'm not going to really get involved in the market until after 9:45 a.m. Eastern, which was in the middle of here somewhere. So they went up into this essentially around the close of yesterday, the gap left open. Your trigger would have been to go short in the E-minis when the SPY hit 567.10. That's 5 cents below the level from the morning. And they acted like it wasn't even there. And very quickly got above the fumble threshold. That's the red line. And some things happened up here. Well, first, let me point out this little spike down here did not happen. Believe me, I know I was in this trade, lost some money. Because if that had happened and the spiders for some reason came down at this big spike, I would have had my 4 points at least. But as it were, they went up, continued higher, and a fumble signal materialized when the E-minis were out of the money 17.5 points. And there was no reason not to reverse because there was no level higher up within a certain amount of points. And so they continued higher, and you would have had 4 points to wash out some of that loss. When we watched the trade that I took, I'll explain what I did, what I was thinking, and why I stayed in it a little longer. But anyway, so 17.5 points given back, 4 points gained, and now they're back down to 567.10. It was 567.15, so you would go long at 567.20. You're looking for a bounce of 4 points in the E-minis, which would be about right there. You don't want price to get under your fumble threshold, about right here. However, they came down to 567.25. That's within our 10-cent threshold, which is a near miss when price comes down quickly and is very soon back up to where you would have had a base hit. So they definitely have this bounce here. That's the market's way of telling you that they're probably not going to respect the level when they come down to it again. And you can see what happened. When they did hit it, they didn't really bounce up high enough. So not triggering the trade was the plan because of that little clue right there. So unfortunately, no points on this trade because, well, the trade never happened per the rules. So the day would have ended in the red. It happens sometimes. That's why we keep track of our win ratio so we know where we are in the long term. We could watch the one trade that I took. Notice the time right after the market opened. Just let them settle in. Didn't do anything until after 9:45. And as you know, they were up here. So I went short at 567.10. That was my trigger to sell 2 E-mini contracts automatically when the SPY hit 567.10. And it did not work out very well, as you might have guessed, since you already know they just blasted through it. So I'll speed up here until they get close. And you'll see the order get filled. I'm short 2 contracts looking for 4 points. Actually, not 4 points, 6 points. And they went higher. So I did not reverse when the fumble signal materialized. And the reason is because right above where they were at that time, or around that time, was an important retracement level. They just blasted through the 50%, the 61.8%. They were heading up to the 75%, and I just didn't want to, I guess I was talking while this happened. So I let them go a little farther, and as soon as it hit $2,000, which is 20 points with 2 contracts, I just closed it out. I'd just bailed. And I let this go farther until 11:30. I had somewhere to be right after 11:30, so I had to kind of just pretty much stop this immediately. But I hoped I could get up here. That never happened, as you already know. And then as they were coming down here, I set some reference levels here down at the 567.20. Adjusted it up toward price. There you go. To see if they did come down here quickly, maybe I'll have time to jump in, but it didn't. So pretty much at 11:30 on the dot or so, I pretty much stopped the recording, closed everything up before I even had time to, let's bring this back up to the end here, to clean anything up. So that was pretty much it. I was gone. And this trade wouldn't have been triggered by the rules anyway, by the way. 567.20 we just looked at. So I gave some points back to the market, and I'll show you what that looks like on the Sam's Trades log. But first, the PBR, the playing by the rules. You can read all these notes, and all the trades happened around here. 17.5 points given back on that first trade at the level, and then 4 points on the reversal, and no recycle trade because of that near miss of just 5 cents or so. So that's where you would have landed with 2 contracts, and you can see all the metrics where we're at. And here's what the Sam's Trades output looks like. My first TKO, a technical knockout, 20 points, or 20 and a quarter really, because that was 20.25 before commissions. That's what I gave back to the market. And you can see where my metrics land. Would have been better off trading Tuesday and Wednesday, the 2 days that I took off, because the levels worked pretty good on those days. I think I might go back and look at some of the history that I've traded around the FOMC days and holidays. I kind of have a policy to not get involved in the market like the day before and the day after a major holiday, if it's in the middle of a week, like say Thanksgiving, day before. And the same thing on FOMC days, because things can be kind of weird Tuesday, definitely Wednesday morning. I'm just kind of curious if there's actually been better days prior to the FOMC than there are after. And it kind of makes sense in a way when I think about it now. But anyway, I chose to get involved and gave some money back. It's a probabilities game. 80-something% of all the trading days over the long term are going to give me some kind of profit, and I'm okay with those numbers. So we will see what happens tomorrow. And as you know, new levels, a new game plan first thing in the morning. Thanks for watching. I appreciate the support. I'll talk to you in the next recap. Have a great day.